All right, well, Apple hitting another record high today. The stock has now gained more than 80% this year, its best yearly performance in a decade. But widely followed analyst Gene Munster at Loup Ventures thinks shares can gain about another 20% in the next year. Munster naming Apple his top FANG pick for 2020. Now, Jim, this is just the latest. I'm going to quickly run through. December 23rd, Wedbush increased Apple to $325. Credit Suisse made positive comments. December 11th, Apple's target increased to $275 at Evercore. Apple's target increased to $300 at Citigroup on December 5th. The analyst community is just literally tripping over itself to either raise their rating, their price target, or both.
Yeah, look, we're
with the exception of Rosenblatt, which reiterated a sell and a $150 target.
So, thanks for the comic relief there. Look, I think we're entering silly season on Apple right now. Gene Munster's a fabulous analyst. I'm not taking a shot at him, but the analyst community right now it's kind of like this scene from Something About Mary. You remember that movie, Brian? Something About Mary?
There's a few scenes in there I remember. I'm not going to go into all of them.
My friend is the director of that one.
Hang on 1 second, Josh. So there's this scene where a guy comes in. I got a great business plan. You've heard of 8-minute abs? I'm going to come up with 7-minute abs. And Ben Stiller says, well, what about the next guy comes up with 6-minute abs? You know, that's where we're going here. It's just falling all over each other until you finally see a top in Apple. If there's one stock, look, the company is fabulous, but if there's one stock that has borrowed 2020's gains into 2019, it's Apple. It probably has a lot to do with the absence of tax gain selling. So I do think you'll see this come down in January. 350, 400, yeah, it'll reach those targets, but not in January, maybe January of 2021.
So you're long-term bullish.
Yeah, but
in the near term, you're a little worried.
As much as I hate making short-term calls, this one just seems so obvious that we've borrowed 2020's gains into 2019.
I think it was Jeff Gundlach a few years ago that at the time made an interesting comment. Obviously, it didn't work out now, but he said, why would Apple go up when, I think it was Gundlach, when everybody already owns it?
Right.
And if you look on Apple, it's the top holding in almost every hedge fund, every pension fund, every mutual. Who's left to buy it?
Yeah. So that's the point that I was going to make, that it is widely owned. It's a $1.3 trillion company. We happen to be overweighted, but that means we have close to 5%. Do we really want more Apple? I don't think so. And I worry that it's almost sacrilegious to say anything against Apple today, but no one liked Apple 12 months ago. The stock was...
I did.
Well, yes, there were some people, but the tone was really negative about Apple and the trade wars and how things were sort of going to collapse for them overseas.
But then Tim Cook, more than any CEO, masterfully and deftly dealt with the White House.
Donald Trump.
Yeah.
So that's, great. Is that going to happen again? We're up 80% from a year ago. And I think that there's an important chart I hope you can pull up, which is the S&P growth versus value index.
Okay.
So people have been talking all year, or certainly the last 6 months, about how value is outperforming growth. Value is outperforming growth. It was up 32.5% so far this year versus 31 for growth. And in the last 4 months of the year, it's up about 10% more if you look at the chart.
There it is.
So that's
look at that.
the
Look
year.
how good the team. Shout out to the halftime team. I don't think they knew you were going to call for that.
Great job.
And they drew that by hand in the last 20 seconds.
And if you go down, we're going to see the last 4 months. And you wonder, why is it that value, which is the orange, should be so far ahead of growth? Well, it's because Apple has been in value. It represents almost 10%.
Oh, a big part of that
value.
also has got to be utilities.
No, not really. It's Apple.
Utilities is soared.
Yeah, but the top names in the index are Apple, which is the biggest, up 5. It represents 5.2%. It is more than Citi, J.P. Morgan, Bank of America, Walmart, Costco, P&G, and another company combined in the top of that index. So it's Apple and chip stocks that have really had these dramatic moves. Now Apple has moved into growth. It's no longer in value. It's moved to growth. If you go down one more,
do you think there's a little portfolio shifting going on by fund managers that say, I've got to be this percentage growth, that percentage value? Suddenly the biggest stock sort of moves up.
It moved.
All of a sudden, everybody has to buy or indexes have to adjust.
Sell. I mean, I think that the move that Apple had this year, 80%, has been so dramatic. It's really hard to shift positioning that fast if you're a portfolio manager on the other side of the trade. And I just worry that, again, it's owned. It's widely owned.
Too owned. No?
Maybe.
Well, the analysts
hard to get it going another 80%. That's for sure.
last word that I'll throw out there, Brian, is that with 5G coming, I've talked about it with Consumer Electronics Show and the focus, and of course Apple is not at Consumer Electronics Show because they don't need to be. They do their own shows. But nonetheless, 5G, that's why everybody, if they are getting ahead of themselves, that's why they're getting ahead. Because when that comes out in September, that is lights out for Apple.